Joining me right now is Glenmede Director of Investment Strategy, Jason Pride. Dagen McDowell also standing by at our New York headquarters, Geraldo Rivera, with me here on site in Paris. Jason, what are you expecting from the retailers this quarter? Do you worry that the terrorist attack here in Paris is going to keep people from shopping and sort of doing the activity that one would expect in the fourth quarter?
Hi, Maria, and thanks for having me on. Look, we're in the mindset that we're still in a longer-term economic expansion. The retail story is going to be reasonably good as we head into December. Consumers are feeling the benefit of lower gas prices in their wallets, and that's probably likely going to show up in their spending because consumers, on average, spend almost every dollar they receive in the U.S. So, from an economic perspective, we think we're still in pretty good shape. In terms of the Paris attacks, look, there's definitely an unfortunate, I think, unnecessary loss of lives here. But there's two primary things that could have a little bit of a headwind on the markets, on economies. Not dramatically so, but a little bit. Number one is it increases the chance of ongoing international conflict, which the markets occasionally do get spooked by. And secondarily, in economic terms, we actually had a slightly positive kind of hidden blessing here in the Syrian refugee situation in Europe, where 259,000 refugees were going to Europe per month to the tune of about 3.1 million per year. That was actually fixing a demographic problem that Europe had within their economy, because those were a lot of skilled workers that were crossing over. If that slows in reaction to this, that could actually be a little bit of a negative impact on the European economy longer term. It's not a near-term thing, it's a longer-term issue.
Yeah, I mean, that's the point. Consumer spending, 2/3 of the economy. You've got to wonder if, in fact, the worries over terrorism actually weigh on an already fragile situation. Geraldo, I don't know if you've had a chance to walk around or sort of view what's going on here, but I don't know, it's sad to see how quiet things are here in Paris. What's your take?
I was at our hotel near the Eiffel Tower, and my brother Craig and I, after all of our reporting on the streets, had a drink late at night, and we noticed as the bar was closing, a young American couple looking very forlorn. And they asked me if I would sign their map of Paris. They arrived on Friday to see the Foo Fighters concert. It was her 40th birthday. Right. Everything was shut down. They had seen nothing. All the museums were closed. The state of emergency existed. France, and far better than I, has been just on the cusp of a fragile economy. Right. They need desperately these tourist dollars. I think that in terms of France, this has been a body blow from which they will be months recovering. It seems reasonable to assume, and that couple really personified exactly why nobody's coming to Paris right now.
And Dagen, you've been waiting for consumers. You were pretty optimistic a couple of weeks ago that consumers would be spending that money that they saved at the gasoline pump come the holidays, Christmas. What's your take now?
Well, so far I've kind of been wrong. I'll be the first to admit that. In terms of, we had the retail sales numbers for last month that came out. They were weaker than expected. Year over year, ex-autos, only up 0.5%. You're going to need to see much better retail sales data over the holiday season. I think with Walmart, what will be critical there, because that stock has lost 1/3 of its value so far this year, that you could get any kind of good news there could mean an upside surprise in the stock. But again, look at Home Depot. Home Depot's bottom line, that earnings per share, coming out better than expected. But if you look, I think that the one concern is luxury. Watch luxury. Luxury is going to fall out of bed, and I'm not sure people are planning for that.
And Jason, big rally in markets this morning. What's your take? Would you put new money to work in stocks right here, real quick?
We would, and I would want to also reiterate one thing that Dagen said. She is actually right. Based on the Chase credit card studies, they have found that consumers are actually spending 100% of their gas savings now, while they are only spending about 60% of it in March. So we're on that track. This is an environment where you should be incrementally buying stocks because the economic expansion is continuing to go.
All right, we'll leave it there. Thanks, everybody. Jason Pride, we will see you soon.